Today is Monday, June 10th, and this is the ADM Investor Services weekly market kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Mark, starting with the grain markets this morning, what are your expectations for Wednesday's USDA report?
Well, I don't expect any significant changes in corn this month. In fact, I see no changes to the current USDA carryout levels, with old crop stocks remaining just above 2 billion bushels, while new crop expected to grow slightly to just over 2.1. In South America, I do see the USDA lowering their Argentine production forecast 3 million metric tons to 50 million metric tons. This is still above the numbers we're seeing from the Buenos Aires Grain Exchange, however, and this should keep U.S. exports competitive in the global marketplace, but for now I don't see any changes on the export side this month after raising them pretty aggressively last month. In beans, I do see ending stocks jumping 15 million bushels on old crop to 355 million, this based on lower crush. While many are expecting lower exports, I think the USDA will keep them steady for at least another month, as I do expect lower production numbers coming out of Brazil due to flooding in Rio Grande do Sul. I see production here slipping 3 million metric tons to 151 million metric tons. I do look for higher carryout on old crop as well due to the higher carrying stocks from last year's crop. So stocks there at 460 million bushels. And in wheat, I do think you're going to see higher production numbers here from the USDA. Winter wheat production, I've got at 1.295 billion bushels. That's up 17 million above the May estimate. My estimate comes in pretty close to the average trade guess. I think total wheat production will be right around 1.9 billion, ending stocks growing to 778 million, which, if realized, that would be the highest level in 4 years. But I also look for lower production numbers coming out of Russia as drought and frost here from earlier in the growing season look to cut their winter wheat production. I'm looking for about a 5 to 6 million metric ton cut off of last month's 88 million metric ton figure.
Mark, everybody's looking at the weather. How is the near-term forecast impacting agricultural prices?
Well, right now, I think the near-term forecast is a little bearish. We expect to see net drying across much of the nation's midsection here this week, especially across the southern Midwest. This will be really helpful to farmers as they wrap up planting progress and some field work as well. But by late this week, we're expected to see temperatures start to build to above, in some cases, much above normal readings, which in the short term, I think is exactly what we need to stimulate some growth, particularly for areas around the Great Lakes region and eastern Corn Belt, where temperatures have been slightly below normal. Longer term, exactly where this high pressure ridge positions itself here by late this month, I think will go a long way at determining the weather forecast over the next 60 days, which will be critical to this year's yield. So right now, though, drought levels here in the U.S. are historically low levels. So I think 1 to 2 weeks of hot and drier than normal conditions are really what the crop needs and will provide minimal stress.
All right. How about a quick review as to where the managed traders are positioned currently when it comes to their grains?
We saw some big selling across the ag space last week from both the money managers and the index funds. Money managers that were net sellers across the entire ag space, with the exception of a couple thousand contracts buying in Minneapolis wheat. In total, they sold just over 200,000 contracts, and this being the most in 1 week since March of 23. Their net short position has swelled now back up to about 226,000 contracts. Index funds, they were also big sellers too, just over 70,000 contracts. And that's the largest we've seen in 1 week from the index fund class since March of 2020. And this is when the whole world was going into COVID lockdowns. So, and this is now the third consecutive week that index funds have been net sellers. So they were the culprit here in seeing lower prices much of last week and starting off lower wheat prices here this week as well.
Alan, let's turn toward the financial markets, particularly the S&P 500 futures. What is the seasonal tendency for the S&P in an election year like we're having this year?
Okay, well, since 1949, the S&P 500 in presidential years has shown an average gain of approximately 8%. And in addition, when a sitting president is running, historically there has been a 12% gain in the S&P 500. So I think we're on course for some better prices. And this does seem to be consistent with the increasing likelihood that major central banks will be lowering key interest rates this year. In fact, we're already seeing that with the European Central Bank cutting last week, the Bank of Canada also cutting their key rate by 25 basis points, and the Fed on track to lower rates either at the September 18th meeting or at the November 7th policy meeting. So fundamentals seem to be coinciding with the seasonal, and that would suggest that there could be some follow-through gains in not just the S&P, but I think all of the major averages.
And when it comes to the precious metals markets, where do you see the support levels on the charts?
Okay, right now it looks like the next major support for gold comes in at the 2,300 level. Now this is on a daily chart. Silver at 2,900 or $29, and copper at $4.40 a pound. Now, most bullish on the gold and the silver, not quite as bullish on copper, since there are some issues with demand right now for copper. Longer term, though, the supply-demand situation for copper seems to be very supportive. So I like the gold and silver right now to the upside, not so much for the copper.
Finally, Alan, which reports will traders be watching closely this week?
Okay, Wednesday we'll have the Consumer Price Index for May, guessed up 0.1%. Of course, we have the Federal Open Market Committee meeting. That will they will have a release at 1 o'clock Central Time, and then the Fed Chair Powell's press conference, as usual, a half hour later at 1:30. So all of that on Wednesday, and then on Thursday, the May Producer Price Index guessed at up 0.1%.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.